to hand it over to Arjun.
Thank you. Thank you, Sagar. Firstly, thank you to Fintech Saudi for the invitation to come and share our thoughts and our perspectives on two very interesting topics. I think the journey that Sagar you just painted from I guess week 1 to week 5 was fascinating and interesting, and actually I think it sort of helps me set up the scene for embedded finance and banking as a service, and especially the session you guys had last week around open banking, because I think that's going to be an interesting and important catalyst. Before we get in, I think I thought it'd be a good idea just to kind of introduce the firm I work for. So I work for the first management consulting firm in the world. So one could argue that every other consulting firm came out of us. Not entirely true, but as a statement that wouldn't be completely unfair. We've been in the business for about 135 years. We have a presence in the Middle East. We have over 200 people spread across the kingdom, the UAE, and some other parts of GCC. Financial services is one of the verticals that we actually tend to operate in. And within financial services, our particular focus tends to be more in terms of what the future of financial services holds. And there's a good reason for it, because we firmly believe as a firm that nobody really actually has, I guess, a monopoly on intellectual capital in terms of how quickly and how rapidly the world is shifting. So it makes for an even playing field. Also, I think it leads to some very interesting, fascinating discussions with a wide array. The second aspect of financial services that's very important to us, and I think you'll see that come out in the presentation today, is that increasingly we see financial services not just as a vertical, but actually as a horizontal. And the concept of embedded finance is that in its truest form. It's about how financial services embeds itself into sectors ranging from retail to automotive to healthcare, in terms of augmenting the consumer or the customer experience of dealing with those sectors, and financial services becomes a catalyst. And I think that itself is quite fascinating. And I think incumbent players, whether they are insurance companies, banks, and so on and so forth, I think theoretically get this, but are now challenged in terms of how they evolve their business models. And from there, banking as a service emerges as a potential business model, which allows them to sort of deliver against this vision. A little bit about me. I don't, Sagar was very kind in terms of introducing myself. So I joined ADL, or Arthur D. Little, about 3 years ago. I see myself both as a part consultant and a part practitioner. I had the good fortune of actually running a fintech across 8 countries in 2 regions for about 5.5, 6 years. And actually, I was embedding finance before the term embedded finance became very popular. In addition to that, just because I guess I love this topic so much, I have a podcast, and also I write weekly on the topic. So, if the topic is of interest to you, please seek me out. I've been in the region for about 12 years. I've been working in KSA for about 12 years. So I have a fairly good, if I may say, understanding of how the market is evolving. I guess I have some the pulse points, and by Joe, things have moved in the last 12 years, in the sense the market that I came to work in 12 years ago to today are 2 different beasts, if I may say so. So that's about me. The way I'd like to tackle today's session is that we've split the presentation into 3 parts. I'll basically start with embedded finance and banking as a service. And I think a very key takeaway for everybody listening is that I think 2 of them actually have a symbiotic relationship. Some might go as far as saying that there are 2 sides of the same coin, right? So we'll talk a little bit about what is embedded finance, what is banking as a service. I'll try and deconstruct these concepts in a manner that is universally understandable. I'll then shift to why do we believe that this is a topic that we should be talking about now, and it's a topic that we should be talking about irrespective whether we are in financial services or not. And again, I'll try and bring these examples to life. And to be honest with you, living in the kingdom, or the wider GCC, we are already experiencing embedded finance, right? And I'll try and give you some examples. But at the same time, I think the point is that this is a journey. I think we are firmly at the start of the journey, and there is some way to go. And for this journey to actually realize its potential, a number of ingredients and a number of players have to actually come together to make the magic happen. And again, I'll share a perspective that we have in terms of who those different parties are, and how does it all come together. And it's not just incumbent on the regulators or just the incumbent financial services players of the fintech, but different parties need to come together. We'll try and end with Q&A. Sagar, I believe, will take the questions, and to my best ability, I'll try and answer the questions. One promise I will make is that if I'm not able to answer the question during the session, we'll take them away, and over a period of time, I think we'll come back with our answers, and Fintech Saudi will find a way of getting it across to you. So with that, I'll basically get into the presentation. So, I think we'll all agree that, financial services over the last 5 to 10 years, is going through sort of an unprecedented change, or what we call disruption, right? This is being driven by multiple shifts. I'm not going to give you a laundry list of everything which is shaping the future of financial services, but I actually wanted to pick on 4. And these 4 are my favorites. I think one is in terms of how, the shift in consumer behavior and how they perceive what financial services needs to do for them is shifting. And when I use the word customer and consumer, I mean both the consumer and the corporates, the large corporates, the small corporates, the micro businesses, and the consumers. And that itself is quite interesting. And I think the rise of the digital banks is one example of that, in terms of how consumers have shifted and started to migrate across these new breed of banks. The second one is about, I guess, the digitization of our lives, right? We are adopting technology at a rate faster than we ever have. Whether it's the example of ChatGPT hitting some crazy number of users in 5 days, to other forms of technology which is embracing our lives and commerce on a day-to-day world. So this digitization of our life actually makes the provision of new solutions and services, including financial services, more efficient and more possible. To add to it, I think the regulators have really stepped up the game, right? I think in a lot of cases, it's the regulation which is actually driving and enabling change. Sagar mentioned a few moments ago about open banking and open finance. And if open banking and open finance was to truly realize its potential, it will make the financial services sector look very, very different in the next decade, right? Now, there's no guarantee that it will succeed, but the potential exists. And I think a lot of that credit needs to go to the regulators and government entities. The growth in public infrastructure, right, is a very interesting move. In effect, I'm a big fan with the work Saudi Payments does in terms of how rapidly it's progressed the digital payment scene in Saudi Arabia. I think without them doing that, I don't think we would have achieved the level of, I guess, digital payment penetration that we have. And finally, by no means the least important, we've got an emergence of a plethora of new players who want to play in the financial services value chain, whether they are fintechs, whether they are non-FIs who want to offer financial services, whether they're big tech firms, and so on and so forth. So you put all of these together and you start seeing that the value chain of financial services has changed. Now, lots of things have emerged out of it. 2 very interesting developments are embedded finance and banking as a service. And what I've tried to do is try and simplify and give a very universal, I guess, definition to both topics. In simple terms, and I'm not going to read the words, I'm going to let you guys read the words, but in simple terms for me, embedded finance is the ability of a non-FI, for example, a retailer, to be able to embed financial services in a manner that is seamless, is convenient, and engaging in their core journey, which could be about selling clothes, right? A great example, and I know it's a sort of naughty poster child of embedded finance, is buy now pay later, BNPL, right? BNPL has been adopted by retailers across the board, basically to enable the way we make our purchase journeys, right? And it's very seamless. On the same time, banking as a service, and I did mention on the other side, is a key enabler, and arguably the other side of the coin is a number of banks have actually realized that they have the ability to adopt different business models to monetize this shift in the market that we are seeing by providing banking products and services through third-party distributors who typically are non-FI by integrating their offering, right? And they take care of the regulatory side and the financial infrastructure side because they're licensed banks. So in a way, they disintermediate themselves from the end customer, but in return, they grow the size of the pie, right? And in a way, it increases the size of financial services. Now, if BaaS is truly to realize its potential, we're not only going to do more, sell more clothes or consume more products, but we're also going to solve problems around financial inclusion and other such, I guess, noble causes. So two of them very interesting developments, and they are at a very early stage. If I take this discussion a little further, and we take a step back, and apologies for the complexity of this page, but I'll walk you through this journey, and you start with me at the bottom, right? We're starting to see a regulatory shift in the market, right? So you have open banking in some markets, we're starting to see open finance, and eventually this all leads to an open economy. And what it really means is the ability to actually leverage and use data in a safe, private, and a secure manner. Now that allows the banks to start saying that, we can leverage all of this and evolve our business model slightly or create new businesses, whether it's banking as a service, banking as a platform, etc., so on and so forth, which allows us to find new ways of earning. Now, that obviously puts a certain level of pressure, if I may use the word, and I don't mean pressure in the negative sense, that it forces them to move beyond their core legacy platforms and start working with third parties. And those third parties could be fintech infrastructure players. It could be these open banking infrastructure players, which allows them to adopt these new business models, right? Which then allows them to bring on the fintechs and the non-FS partners to connect with them, right? And I call this layer the magic makers, right? Who then can offer embedded finance. And that ability to offer embedded finance allows these non-FIs and fintechs to create new user experiences, new segments, and new products, right? The reason I actually wanted to show this is that there is complete method in the madness in the way this world is evolving, right? And the other thing I wanted to show was that there is a clear symbiotic relationship between banking as a service and embedded finance. What I also want to say is that the two can coexist without each other, right? We've had forms of embedded finance. We used to call it integrated finance, which have existed for well over a decade. And yes, you can do BaaS and not necessarily do embedded finance. But when you combine the two together, the power is actually greatly enhanced, right? So I think it's in the interest of the entire ecosystem that both of these things develop at the same time and keep pace with each other, right? I'll go a little bit further into embedded finance now, right? So why is embedded finance attractive to non-FIs, right? So why do retailers, why do automotive players, why do healthcare companies want to start offering financial services as a part of their overall offering to their consumers and customers, right? One is it allows them to grow their addressable market, right? So the ability to offer financing, for example, attracts people who would have typically not come and transacted with these people. That tends to be the number one reason, right? The second is that it genuinely enhances the user experience. right? It makes payment, in some cases, lending, saving, so on and so forth, that much more easier because it's actually seamless and it's integrated, right? So making a payment becomes an afterthought. I'll give you an example. 10, 15 years ago, when I used to go to a restaurant, and if I was taking any clients, I used to actually have I used to get pangs when the credit card bill used to come, because my biggest concern used to be, will my credit card get accepted or not, right? With experiences like embedded finance, where people can check out, use your in-app solutions like Apple Pay, or use your BNPL players like Tamara and Tabby, that user experience gets actually enhanced. The third is you start to collect more data. Now, people use the term that data is the new oil. If that's the case, then financial services data is the olive oil, right? And this allows companies to collect data around financial services products, which then allows them to better customize and personalize products. And finally, for the ones who have really unlocked the opportunity with non-FI, it actually allows them to generate incremental income. I'll throw an example here, and I'll come back to it later. Some of you might have heard of a company called Shopify, right? Which is basically a platform on which people can launch their e-commerce businesses. Shopify actually makes more money now out of its financial services business than it does out of its core business, which is offering platform. And those are the businesses which have realized that the opportunity associated with offering financial services is tremendous, right? A little bit further, if I break the term embedded finance a little bit more, right? And by no means is this an exhaustive view, it's an illustrative view to show. There are a number of ways embedded finance can be seen. Embedded payments is something that we've had for a while, right? And we've got very, very familiar with, whether that is through wallets, cross-border payments, B2B payments, those have existed. Then we started seeing a lot of growth in terms of lending. And as I said, to be honest with you, BNPL was what led the way, right? But now you have point of sale loans. You can, in the B2B side, you have automated underwriting of invoices or factoring of invoices. You have loan against revenues, and so on and so forth, right? You have embedded insurance, huge opportunity. Unfortunately, it has not really realized the potential. Number of reasons for it. Another time, another discussion. And then there is this very interesting angle around embedded savings. And very recently, we actually wrote a very interesting viewpoint in terms of the potential associated with embedded savings. And last but not least, I think there is an opportunity with embedded investment. So embedded finance is actually a wide term. I've given you 4 examples out here, but the truth is you can start to embed nearly anything and everything. And it is not just for a B2C market, but it actually also exists for the B2B market. So it covers pretty much the entire realm of financial services as it exists. People ask me, right, so what's so different about an embedded product versus a standalone product, right? So here's a very simple example, right? I think all of us, I think some of you might be very young, but most of us actually grew up with standalone products, right? The financial services companies, which offered financial products, right, through their platforms. There was literally no integration in terms of non-financial services products. Then basically we came into the generation which exists today, and it's actually very widespread, which is around integrated products, right? Where financial company platforms integrate with third-party company platforms and users. The best example for that is payment gateways in e-commerce platforms, right? Where we go onto an e-commerce platform, we finish our journey for shopping. At the end of the journey, they ask for our credit card details. We put in our credit card details and we make a payment, right? We've now come into the world where products are seamlessly embedded, right? So we can actually make the payment experience not like an integrated journey, but it can actually be as we go through the process. And the best example I'll give you is one which we've seen in the market. There is a food delivery company in KSA. It's called 2U. 2U has partnered with a company called Tabby, which is a buy now, pay later company. And if you were to actually go onto the 2U app and order your food today, at the end of the journey, it gives you an opportunity to defer your payment. And all you have to do is press a button and your payment gets deferred. What happens is at the end of the month, you get a single bill of all the food that you have consumed during that month. And that's a single bill which you pay off, right? In effect, they've taken that whole sort of having to make a payment at that specific time out. So the journey is actually seamless, right? It's completely integrated, it's completely embedded, and it takes away the payment journey out of the consumer journey. But in effect, you've still done the payment because you've deferred the payment. So here's an example of an embedded product. There are several other embedded product examples that I'll give during the engagement, right? But I thought it would be a good idea to actually give you an illustrative view. So what I did was borrowed a slide out of a company called Fintech, and I really like this slide. And if you see, what they've tried to do is shown the difference between what an integrated payment looks like, and they've used a plan of a real estate plan, right, versus what an embedded payment looks like. Embedded payment is within the household. Integrated payment is not within the household wall, but it's attached to the household, right? And on the right-hand side, without the risk of actually having to go through the details, you can actually very clearly see the difference between what embedded payment means versus integrated payment. And therefore, what I wanted to say was that this is not just a play on words. This is actually a fundamental shift in the way financial services is actually distributed. And I'm only using payments as an example. Yeah. So, as I said earlier, in the sense that embedded finance sounds simple, but it's a fairly complex concept to deliver, because it requires a number of different participants all to come together and work together. And this is, I believe, the biggest challenge you're going to have in terms of realizing the potential with embedded finance when I start sharing the numbers. Very, very quickly, on the right-hand side, we have government. And what I mean by government is the regulators or government-backed ecosystem developers, public infrastructure players. Then you have the core providers of financial services, which could be banks, insurance companies, payment companies, so on and so forth, right? In the middle are these enablers, which make, as I said earlier, the magic happen. Here, you can actually have fintechs. There are certain traditional FIs who have actually invested in technology. There are technology players or technology infrastructure players. And there's also a role that government can actually play in here, right? In terms of, for example, digital KYC, right? Data and privacy. And then finally, arguably, in my humble opinion, the most important part of this value chain are the people who are the embedders, right? Until and unless they learn how to embed financial services within their journey in a seamless manner, right, we're never actually going to realize the potential. And you'll see that this is actually quite a wide range of players. So these could be non-FI. You could actually have traditional financial institutions who go down. Two great examples are DBS in Singapore and JP Morgan in the US. Obviously, big tech, Apple, I'll use as an example. And then there are certain governments for government-related, financial services requirements. They themselves are embedded, right? Now, one party which I've missed on this, and not particularly, is that there is a role of investors, right, to play too, right? And they are playing the role of catalysts in a different way. So I've actually put them on the bottom right corner just to say that, they have a role to play. But these five, right, from the end user to the government, have to come together to realize the opportunity of embedded finance. And then I talked about the opportunity, right? Now, there are a number of people who've come up with numbers. There's a gentleman out of the UK called Simon Torrance who did this analysis and suggested that embedded finance by the year 2030 has the potential of 7.2 trillion, right? That's a big number, right? It's actually a number equivalent to the market capitalization of all the fintechs and the top 30 global banks and insurance companies last year. Now, to be honest, the way I look at this, right, I couldn't be bothered whether it's 7.2 trillion or 4 trillion or 3 trillion. The fact of the matter is the number is massive, right? I also would like to tell you that the number is not net new money, right? A lot of this money will be displaced, which means the value will shift out of traditional financial services players and move across. And I'll tell you the greatest example is, some of the stories which are coming out of the US, where I think, you have this co-brand between Apple and Goldman Sachs. Apple seems to be enjoying a great time with that co-brand, Goldman Sachs hasn't. So in that case, it's very clear that the value has shifted to Apple out of Goldman, right? Having said that, this is a piece of work done by a company called Deal Room, where they took that 7 trillion number and they said, right, where do we really see that 7 trillion split? And while retail and e-commerce, both B2B, B2C and B2B, is about nearly 50% of the opportunity, you'll see that actually the opportunity exists across pretty much every sector, and the number is reasonably impressive, right? And we in the kingdom, right, with the progressive attitude we have towards regulation, with open banking coming, the growth in fintech that we have seen, I think we've crossed 150, and I think the intent is to cross 500 very quickly, right? Slowly, the interest of the large banks to get involved and the traditional non-FIs starting to offer this, and obviously the new financial services, new non-FIs also offering, you could sort of see that the perfect, virtuous cycle is forming. Furthermore, everybody on this call is very savvy with their mobile phone, and you're at an age group where you guys are open to experimentation. So in a lot of ways, I actually think that the opportunity with embedded finance in countries like Saudi Arabia is actually far greater than some of the other countries, right? For a number of reasons, I've mentioned this, right? I'll now shift from embedded finance to banking as a service. Now, in the last week, you heard your speaker talk about open banking, right? Now, what open banking is doing is encouraging banks to look at different ways they can evolve their business model, and I've listed 3 of them, and there's more, right? We're going to only focus on banking as a service. This is a great one, but I thought it would be a good idea to sort of share some other type of models which are actually which are emerging, right? If I again replay what banking as a service is in simple terms, it's the ability to embed new financial products which are manufactured by fintechs, banks, or jointly into non-FIs, right? Banks become key enablers to fintechs and non-FIs to realize their ambitions of embedded finance. In return, so what actually happens is banks typically disintermediate themselves from the end customer, right? But they make money because, as I said, they grow the pie, right? And let me say this very clearly. If you have to truly realize the potential of embedded finance, we're not going to achieve it until and unless the incumbent banks come to the party, right? And I'm happy to argue that with anybody. We're just not going to realize this. So the banks have to be encouraged, cajoled, regulated to play a role. We need them for the embedded finance opportunity to be realized, right? Here are sort of some further detail. Again, I don't necessarily want to go into reading each of these. I think what's very, very important here is banks are licensed entities, right? They have balance sheets. They have product structures, right, which can all be leveraged by these fintechs to produce new customer journeys and new solutions. And it's very essential, the word new, because embedded finance is not about selling what we have today just through a new channel. It is actually producing new products, new services, and new experiences, leveraging what we have today, but giving the customer, whether it's a corporate or an individual, a new experience. And that's very essential, right? So any bank who thinks that, oh, embedded finance is, I'll just take my credit card and just push it through another channel, right? That ain't embedded finance. You can do that, right? That's just channel distribution, right? And I think a lot of people have tried doing that, and that's misfired, right? We talked about monetization models for banks, right? And this is a conversation that we have constantly with banks, a lot of our clients, right? So how can banks actually monetize with banking as a service? Because the initial conversation tends to be, oh, well, banking as a service is punitive to us if we're bankers. We lose out on all the opportunity. The fintechs and the non-FIs walk away with all the value. Not entirely true, right? Banks have number of ways that they can monetize, right? There are transaction models, right? There are data sharing models. They can charge subscription. They can actually do revenue share, right? And potentially create new revenue streams, right? By creating new products and services, right? The fact of the matter here is the banks have to realize which of these do they want to back and how quickly they want to accelerate through this journey. And I think that will involve them to shift from the legacy that they have. And the legacy is not just the infrastructure or the technology, but it's also the mindset and the way that they have operated previously. Yeah. Here are some examples of banks and insurance companies who have now dipped their toe or more than dipped their toe into the concept of banking as a service. And associated themselves with embedded finance. You know, I mentioned the Goldman Sachs example. They're working with everybody from Apple to Amazon to Shopify to JetBlue, right? JP Morgan is always progressive. As a matter of fact, you know, JP Morgan made an announcement that they want to build the world's largest travel agency, right? Which is a very interesting tactic because, you know, a lot of financial services goes into the way travel, tourism, and hospitality happen. Plus, it's a great way to acquire customers and collect their data. Now, whether or not they actually truly deliver it, that ambition or not, it would be interesting. DBS has always been on the leading edge as far as Southeast Asia is concerned in terms of embedding new business models, working with fintechs to be able to service the needs. And then, you know, there are other examples with AXA, Allianz, two insurance examples, right? So this is not new. We're also starting to see banks in the kingdom. I'm not going to name any particularly, but, you know, we're starting to see large and small banks starting to show interest in terms of how they can work with the fintechs, right? In terms of making some of their products and services available to these fintechs, tailored, you know, evolved for the customers, whether that's consumers and stuff. I think a lot of this is right now just basic. So basic in terms of either lending them their balance sheet so that they can use their balance sheet. Some are talking about creating agency banking networks. Others are saying we'll become BIN sponsors in the issuance of virtual cards. It's early days and very basic, but I think it's the right kind of steps that we are taking here in the kingdom. Right. I mentioned about to play and succeed, right? Here are 4 areas that I think banks need to overcome in terms of being able to really succeed. One is around their legacy infrastructure, and it can be, right? Banks have typically got infrastructure which does not conducively work for these new journeys, right? There are solutions for it, right, in terms of working with infrastructure fintechs, which can solve for that, right? But banks have to really understand that they need to move beyond the legacy infrastructure. There's obviously a very genuine concern around consent and security. I think regulators have to play a key role in it, but I think banks also need to start seeing this from a perspective of how they can evolve, right? I'll give you an example. There are certain markets in the world where you still need red ink in terms of signatures. Now, it's impossible to deliver an embedded digital journey where wet ink is required. Here, I think, you know, the incumbents and the regulators have to come together to solve for the problem. The third is this view around customer ownership, right? So I'll be honest with you, if you ask majority of the customers, even on the call today, right? If I was to ask you, who owns your data which the banks hold, most of us will say it's actually the bank's data. The truth is no, it's actually your data, right? Now, that bit the banks will overcome because soon enough the customers will get educated and aware. But one of the things the banks have a huge issue with is saying, who's going to own the customer, right? And the regulator might actually say that the customer is actually the responsibility of the licensed entity, but actually the bank is not engaging with the end customer. So there's a massive trust angle comes in. And I think a number of these fintechs need to understand that the reason a number of incumbent banks and financial services firms are not working with them is because they just have not given them that level of trust, that they know how to deal with regulated and compliant products, right, in the manner that they should. Instead, they are obsessing, correctly so, around giving the experience. Now, while the experience is important, we cannot completely be ignorant about the importance of regulation and other elements that financial services industries have been created around and what the regulator wants them to. And then finally, obviously, there are challenges around operational and reputational risk because every time there is a problem, people are very quick at pointing fingers, saying, "Oh, it's my banking partner's problem," even if it's not their mistake, right? So that's something which needs to be addressed. And let's be honest, banks are not known to give great operational experiences, right? They're not built to do that. Now that's changing, right? And I do think that embedded finance will further drive that shift in the way the middle offices and the back offices of these banks work, right? Conscious of time, why are we talking about this now, right? There are 6 reasons, right? And what I'll do is very, very quickly go into why the time for embedded finance and BaaS, or the conversation for it, is now at every level. First, there seems to be a lot of interest and demand coming out of the consumers, right? Here are 2 surveys in front of you. They're in 2 different parts of the world, and they're asking slightly different questions. What you can see quite clearly is that a large percentage of the consumers, and obviously it is skewed towards the younger consumer base, they are willing and happy to start consuming financial services that is offered by non-consumer, non-banking institution. One great example is, I don't know if you read the news recently, Apple's saving accounts, I think, has already hit $10 billion in savings, and it's only been a few weeks since it was launched, right? Similarly, when you go and talk to SMEs who have consistently been underserved, right, across their entire life cycle, and this is basically a view, and it's a study that ADL actually did, where we looked at the needs of an SME over a 5-year period, and we realized that financial services was all over. We realized that in every step they're underserved, right? They are very, very happy to work with non-financial institutions who can serve. Now you have a number of examples, right? So Sari is working with their merchant base, offering them loans. Foodix is doing something similar. And again, it's not just those 2. There are several players who are playing in these different spaces, who are starting to offer financial services to micro and small businesses in a manner that they can consume, right, so that they can continue to grow and flourish the business. Very, very important, because let's be honest, the vast majority of the employee force of any country is hired by these small and medium businesses. And secondly, in a number of economies, they are the engine of any economy, right? And embedded finance, with the support of banking as a service, solves this problem of being underserved. Right, reason 2. There are a number of reasons non-FIs, or who we call embedders, want to integrate financial services. I'm not going to go through all the 7 or 8 which are listed here, right? But 2 or 3 which is quite simple, right? One is around improved customer experience. That tends to be one of the bigger reasons why they want to embed financial services, right? Secondly, what they've realized is the ability and the provisioning of financial services at the point of purchase actually drives consumer demand. Now, it doesn't necessarily mean that you start eating more food, right? But what it does mean for, let's say, a food delivery company is you come more often and more frequently to order with them, right? Thirdly, it actually helps with competitive positioning, right? Because it becomes a differentiator in the way that is actually offered to the customer, right? So there are a number of reasons non-FIs, whether they are retailers or automotive companies, want to embed financial services. And here are some examples, right? So there's no better way but to actually bring it to life, right? And I'll focus the one on the right because it was actually a survey which was done by ADL specifically on BNPL, when we asked actually quite a large cohort of merchants from a range of backgrounds in terms of why do you really want to offer BNPL, and the answers are in front of you. 36% of them actually said that their ability to convert the customer when he or she was either in their store or on their e-commerce was much higher than before they actually had BNPL, right? And so on and so forth. So, there's enough empirical evidence. And that is the reason why actually BNPL has grown in this part of the world, because it's actually being championed by retailers and other players. And now, you have airlines offering it, right? You have healthcare companies offering it. You have food delivery companies offering it. You have schools offering it. So BNPL is going to evolve from, only being offered by people selling clothing companies to actually becoming a form of payment. And actually, to be honest with you, it actually morphs or blurs the line between lending and payment. Now, we'll see how the regulation plays out, right? And how the competition comes in. Furthermore examples, and again, I don't want to go into too much detail, I mentioned it to it, right? Apple has been a great example. In fact, if I skip a slide and just show you, Apple actually is on the way, and I don't think that it'll become a bank, but in all intensive purposes, it is becoming, the biggest new bank that we might know in the world, right? They are deeply embedded in payments. We all know Apple Pay, we use it, right? The Apple credit card has done phenomenally well. And it's not just the credit card, they actually offer other credit programs. I obviously mentioned the cards. They're doing a lot in the SME world. People don't actually hear about it because I guess it's not as cool and therefore not shared as much. And then they've launched the savings product, right? And again, embedded savings is one of my favorite hobby horses right now, because I don't think it gets the necessary attention. And actually, as a foundational product, it's great because if you actually have savings underneath it, you can do a lot more, because with savings, investment comes in, spend, payment, so on and so forth comes on the back of that, right? Furthermore, some examples, and what I did was I took examples out of the sector, various different sectors of people who are deeply embedding financial services, some doing a better job than others. But the point of the matter is that there is actually a clear trend. I mentioned Shopify, actually, I think generates 70% of its income. You have Airbnb, which actually offers. Airbnb will shock you. They actually embed more financial services, but they don't have a loyalty program, right? So here's, it's very interesting angle to see that, all hotels have loyalty programs. Airbnb said, no, let's go down the embedded finance route because that's more attractive. I think it was a very smart decision, and so on and so forth. Now, there's no shortage, right, of fintechs who want to make embedded finance happen, because I think, these infrastructure players, these vertically focused players, these white label players realize that banks will struggle in 2 or 3 areas. One is infrastructure, right, and how they've actually evolved the legacy. Secondly, being able to produce being able to have the technology to integrate seamlessly with the embedding company, right? And thirdly, be able to produce new products and consumer experiences and customer experiences. And there's a whole host of players out there. And I'll tell you what I actually like about this. What I like about fintech players who are playing in this place is that they're not playing the arbitrage game. Historically, a lot of fintechs came into business because they were inefficient arbitrage either in the public infrastructure or in the banking infrastructure. To me, that's not a sustainable business model, because in effect, what you do is you start with a capability that turns into a feature very quickly. These guys are actually adding value to the whole experience, and therefore, I think they have more sustainability in their business model. Yeah. Here's an example. This is an example more for Stripe than for Shopify. We talked about Shopify. So if you haven't heard of Stripe, Stripe is started their life as a payment gateway company. They launched a product a few years ago called Stripe Treasury. And what Stripe Treasury does is, I put 6 boxes, but I'm sure there are a lot more, many products now they're offering. They came up with products who they believe small and medium-sized merchants would require. They went and then integrated that with Shopify, because that's the fastest way to get to the merchants. And on the back end, they went and said to the banking partners that, hey, we're going to give you ready access to all these merchants through Shopify. So do you want to play ball? And what they've done is orchestrated an entire ecosystem. Now we're seeing this replicated again and again. And I'll be honest with you that there are actually payment fintechs currently in the region who are building something similar, because this is pretty much where I believe, payment infrastructure will head going forward. And if you're not going to be playing this game, right, to make money just on payment processing, I think it's going to get harder and harder, right? So evolution gets quite interesting. And what actually happens is partnerships and collaborations become more and more interesting. So a very key theme which is emerging is not just business model evolution, but also the fact that people are having to partner, right? Which, in my humble opinion, creates a much more sustainable business model, sustainable financial services model for any economy. Another example is Billy, and the reason I raise that is because I think a lot of people think about BNPL and lending purely as a consumer product, but actually I think the real big opportunity is in the micro and small business segment. They are underserved very poorly. In the kingdom, I think we have a massive financing gap, and I think we want to see more and more fintechs working with financial services players, incumbent financial services players, solving their problems. Because I don't think the banks and the NBFCs alone, with all due respect, with as much technology as they might adopt, will be able to solve for this. They will need to collaborate with embedders and fintechs. This is just an example of one company which is out of the US, but there are examples. Also, what I wanted to actually highlight was that this is leading to the banks to think differently, right? And this is a very interesting slide. I'm deviating a little bit away from embedded finance and BaaS, but with the growth of embedded finance and growth of banking as a service, you're actually starting to see very different and innovative banking models come up. Now, one example here is of Cross River, which is a poster child for banking as a service. You might have heard or might not have heard of a company called Affirm, AFFIRM, which is a large point-of-sale financing business in the US. They are purely powered by Cross River, right? But there are some other examples, and I don't have the time today, but I would really encourage you guys to go and do some sort of homework yourself if that's of interest to you. But to look at how banks like Tinkoff have actually become a banking super app. Kakao is actually part of the wider Kakao ecosystem. So it's basically embedded itself in the wider ecosystem, which is a marketplace. And then on the extreme right is Oak North, which has gone down and said, we want to go down product specialism. And we want to build a technology stack which is fit for purpose. And our example is that Oak North has built a technology platform which, if I'm not wrong, 18 other banks now globally are leveraging their platform to target the same problem, which is getting lending to micro and small businesses. And this is the beauty of evolving business models. It makes existing players think differently, and it leads to the evolution of the entire market. So apologies, I sort of steered away, but I thought it's important that we understand that it's not just banking as a service. There are a couple of examples. I talked about Cross River. I'll hold on the slide for 5 seconds. And as you can see, Cross River actually does no direct consumer business. It's a business which purely exists to power fintechs and non-FIs who in turn service the customers. They just sit at the back end and service these businesses and make money that way, which is quite novel. And we will see businesses like this emerge in this part of the world without doubt. Now, I said, why are we talking about it now? The reason we are also talking about it now is this very, very important slide, right? This slide basically shows how we expect the regulation to evolve, right, across the world, including the kingdom. We are already going down the open banking route. It's only a question of time when we go from open banking to open finance. And from open finance, we open up to open economy. And in the extreme right-hand model, you basically start seeing the true power of data being unlocked, right? And it being used in a manner that will allow us to embed financial services seamlessly across e-commerce, gaming, payroll, utility, healthcare, telecoms, so on and so forth, and be able to use data both ways. right? Data which will come out of the verticals that I mentioned, and banking, which will allow for better and more relevant and designed products, right? So we've heard this story for 20 years for people like me that, we give you relevant, tailored banking. With all due respect, those words have meant nothing for over a decade. We're now starting to see, right, the relevance. The joke is, I've had a credit card with a particular company for 10 years. I'm vegetarian. Every 6 weeks, I get an offer on hamburger. And I sit there and going, you have my customer data, you have my payment data, you can see I never eat in a restaurant which serves meat. Why do you send me an offer every 6 weeks on going and buying a burger for 50% off, right? Those days have to end. And I think we're pretty close to those days ending because, banks and fintech firms will be able to use data. And now with, AI and so on and so forth coming, we're actually going to start getting much more relevant financial services. And finally, by no means the least, I know we're going through a very hard time. If you were to speak to a fintech founder or any startup right now, it's very, very hard to get capital. But if you really look at relative investment, embedded finance and banking as a service, embedded payments, embedded insurance has actually enjoyed, the lion's share of the invested dollar coming from the investors into this sector. So investors like this sector too, right? And so this is my point around saying, if you put all of these 6 elements, right? Consumers want it, embedders want to provide it. There are enough fintechs which can make it happen. The traditional financial services organizations are realizing that they want to play ball because there is money to be made and the opportunity to improve as businesses. The regulation is moving in the right direction and the investor is willing to invest. We create this perfect environment, right, which allows us to deliver embedded finance and PaaS, and in turn, right, really radically change the way. Right. Having said that, it's not all that easy, right? It's easy for me to say these words. There are a number of barriers that exist today. And again, I'm not going to get into it. I have a concern around data security and privacy, and I think a lot more has to be done in that space, right? I think there's a lack of awareness. A lot of education has to be done in terms of a consumer perspective, right? And I think the financial ecosystem needs to sort of come together a little bit more because it is fragmented in a number of markets. And not to mention that there is resistance to change, which is, I guess, a human behavior to any level of change. Having said that, I don't think any of these are unsurmountable. I think we can do it. So we have a long way to go. Here is a way to actually show where we are in terms of the maturity curve with regards to the various embedded finance offerings. It's just another way to show it. And the good thing here is that, a number of these are actually in the early stages in terms of the maturity of the product, right? And this is a reflective of basically the, where a number of the startups are, right? And there's going to be innovation even in areas which are in the pre-exit stage, M&A and IPO stage. But as you see, payments are a little bit ahead. Everything else is slightly behind, right? And that's expected. Here's a relative study. Again, this is something that we had done as a proprietary research. And it is a subjective view, but we collected a lot of data. We are fairly in the early stage of embedded finance, right? Retail and e-commerce is pretty much the only area with now food delivery and mobility where we have actually seen a certain level of embedding. But, huge sectors like healthcare, travel, real estate, which are, multi-trillion-dollar sectors or multi-billion-dollar sectors, have yet to actually embrace embedded finance. And I think there's a massive opportunity out there. I'm actually doing a piece of work where I'm looking at embedded finance right now in the automotive and mobility sector, and the numbers are staggering, right? Even if you deliver 10 to 20% or what it could, right? The value it creates for the financial services sector and actually the embedder is tremendous. Number of things influence that, right? Again, apologies for the busyness of the slide, but I thought I'll share. One key area is shortage of talent, right? I think people need to understand the concept of embedded finance, banking as a service, what does APIs actually mean? How do you actually bring all of this together, right? Having said that, it's good to hear number of countries have national upskilling and reskilling programs which they are embarking on, right? Which is helping either banks and fintechs to upskill and reskill. We have lots of young, innovators who are coming in who are, attracting talent into the market. But I think that's one area we definitely need. The other one is my favorite horse, and I'll repeat it again, is we need new products and services. This is not about peddling what we already have, right? I also think we need greater innovation in fintech. With all due respect, right? Too many payment players, right? And too many Me Too players, right? So someone sees something successful in the US, oh, let's come and replicate it out here. No harm in doing that as long as you're actually tailoring it. But I think we really need to think hard around, genuinely innovative products. And we're starting to see that, right? So what we've seen in the past is not necessarily bad, but I do think, we need to go through a certain level of maturity, right? And I think I mentioned around customer awareness, empowerment, and trust is required. And therefore, it's very important that the initial embedded finance players are organizations that consumers trust. Because if we get this wrong upfront, right, it could actually be quite damaging to the entire sector. And that's why I'm actually quite happy that large players like telcos and big retailers are playing a role, because I believe that they will do the right thing in terms of awareness, education, building that trust. Now, last slide, and I guess I'm just on time. This is the mix for making a good dish, right? So if you really want to realize the potential of embedded finance and bring banking as a service to scale, here are 6 things that I personally would like to add, and these need to come together, arguably at the same time, for the magic to happen. That's me. Apologies, that was a lot of content. I'll leave this slide for you to take away. I won't speak about it, but I hope in the last sort of 45 to 50 minutes, I've been able to share with you a flavor of what embedded finance and banking as a service is, and I've been able to sort of stimulate some interest on the topic, which will allow you guys to go and explore this further. So thank you.
Thank you very much, Arjun. That was a huge amount of detail there and really, really interesting stuff. I learned a lot from that personally. And I think everyone, the 2,500 people with us, also learned a lot from that as well. So thank you a lot for that presentation. Thank you everyone for staying with us. I know a few people have messaged about leaving. If you need to leave, you're more than welcome to leave. I know a lot of people stayed with us since 6:30. But next week, just remember, we are back at 7 o'clock. So after popular demand, we are sticking to starting at 7 o'clock. So please do join us at 7 o'clock. I do have a lot of questions, Arjun, so I hope you've got a bit of time now for us to go through some of these questions. So
I'll try my best.
But I mean, it first was a basic question. I think this is because a few people joined after you mentioned the definition. But if you could just give one simple example of an embedded finance and one simple example of a banking as a service.
Okay, so a simple example for embedded finance, I think I use that example is for people who live in the kingdom, download an app. This is not a plug for 2U, but download the app 2U, which is a food delivery app. And what you realize is that as you actually end your ordering journey, you're actually given an opportunity to defer your payments, right? And what that allows you to do is for a particular given month, defer all your orders, right? Which then get consolidated at the end of the month, and they then get presented as a single month. The reason for that is that people's salary cycles tend to be closer to the end and start of a month, and so therefore businesses felt that in the middle of the month you would see a dip, right, in terms of people ordering. Immediately by introducing a product like this, which is seamlessly integrated into the customer journey, right, and actually is customer friendly because it aligns with the needs of the customers, you're seeing an upscale. So that's an example of embedded finance. You can go to a number of retailers, e-commerce players, where you can actually do a buy now, pay later. right? That's another example of embedded finance, right? On banking as a service, in very simple terms, I think the most common example that we are actually seeing is the issuance of virtual cards, right? So a number of non-FIs are able to issue you virtual cards real time on your mobile phones, right? And what's really actually happening is that they're engaging with the company that they're operating with. Behind them is actually a fintech, which is basically doing the card issuing, and who they are attached to is a banking provider. So the bank is actually providing the license, right? And the settlement at the back, right? So they're offering core services or capabilities, right? But you at the front end don't know whose prepaid card you're using. You're using the prepaid card of the customer. So that's just a very, very simple example of banking as a service, which we already see in the Middle East, actually in the kingdom.
And I guess a follow-up question, Arjun, bringing it back to Saudi, why? So right now, banks have historically been very comfortable, right? They've all had their market share. They've been quite comfortable with their own customers. Why would banks go ahead and disrupt that? What is the driver which is going to drive banks to say embedded finance is a great opportunity for me to start looking at doing this? Is it the regulators? Is it leadership from the banks? Where do you see the key sort of triggers for this?
So I think I'll put regulation aside, right? Because sometimes people feel regulation is the stick rather than the carrot, right? So I'll put regulation outside. I think there's a number of reasons, right? So for example, banks have had an ambition. A number of banks have had the ambition to grow their micro and small business segments, right? What has actually stopped them from doing that is access to the customer base is hard. Cost of customer acquisition is very high. And the quality of the data that they collect on those people doesn't allow them to underwrite lending products at a price that is attractive. And then collections is expensive, right? Operating with players who are already working with those small businesses on a day-to-day basis, right? Whether they are providing them inventory or providing them software or hardware, right? You start addressing all of those problems, right? So that's one reason. So you grow your target addressable market, right? If you're a small bank or a smaller bank, right, or a mid-sized bank, here's a great opportunity for you to say, you know something, we could work with a third party to scale up the number of customers that we could get, right? Which was actually Goldman Sachs' entire game with Apple, because Goldman Sachs came into retail banking a lot later. You had giants in the market like Wells Fargo, Bank of America. So the same argument stacks up for, I guess, the mid-sized banks in this space to say, if you want to scale up with the customers, right? Thirdly, I do think there's consumer demand, right? I think what we should need to understand is that consumers are demanding this, right? So if the bank is actually just going to blinker itself and say that we're not going to listen to the customer, I guess it's not a very smart strategy, right? Over a period of time, that's going to catch up with you, right? So there's a number of ways to skin it. I think for every bank, it's different depending on where they are in their sort of size, scale, you know, an evolution.
But do you think then banks will eventually, where does this end, right? So we move towards embedded finance, more companies, banks becoming sort of providing this infrastructure play. Does that lead to banks becoming this faceless organization, and customers are using embedded experiences for everything which they use, but don't necessarily, the bank necessarily is not front facing for the customer anymore?
I'm gonna just share. I don't know. Can you see my screen again?
I can. I know we had some trouble before, but it seems to be okay right now.
Here's a view of what the future might look like, right? And what
Arjun, I think it's just it's loading. It's doing what it was doing before.
Sorry, Sagar, I fell out. Fell off. I think the fact of the matter here is that I think the yes, banks will get disintermediated, right? Banks will get disintermediated. There'll be fintechs with licenses, which could be digital banks and neobanks, right? There'll be non-FIs like retailers, telcos. STC plays a great example. I know they've become a digital bank, but even if they're chosen not to, but they could have offered financial services products, right? Banks will need to learn how to make money in more than one way, right? So it's not just always about owning the end customer, but it'll also involve banks offering products, services, and solutions through third parties where they don't own the customer, right? But are able to provide banking services. So I think the future is, and it's in the deck. So as a matter of fact, it's the last slide. I didn't want to go through it because it's a pretty complex slide, and it would have taken another 10 minutes. I was out of time. But I do think that the future is actually quite rich in terms of the number of players that are in the mix who are offering financial services. Yeah. How quickly we get there, I cannot determine it. I think a lot of markets will get determined by the competitive spirit, how much the regulator will want this to happen, so on and so forth. Yeah.
And where do you see Saudi in its journey around embedded finance and banking as a service? I appreciate you mentioned everyone's at an early stage, but do you think there are factors in Saudi, and it's a bit of a leading questions because I know my view on this, but do you think there are factors in Saudi which could actually accelerate embedded finance quite quickly in the market here as well?
Yeah, so I think one of the greatest catalysts is going to be the open banking, open finance regulation, right? So I think that itself will be a trigger, right? Secondly is I think your growth in terms of fintechs, right? And as I said, we got to get beyond payments, right? Today, we're heavily skewed towards a lot of payment players, right? I think where we are, I think a lot of this is happening. A lot of embedded finance is right now in the way of integrated finance going on, right? A lot of it is happening in a quasi-regulated manner, if I use that term, just to be politically sensitive, right? Because the demand exists, right? I personally think the biggest opportunity in the near term, and again, the regulator will have to support here, is with the micro and small businesses, because they really genuinely need help. Right. And I think there are a number of non-FIs who are well positioned to help them. I think there are fintechs which can make that magic happen. I think we just need to bring some of the banks on board. In our conversations, to be honest with you, increasingly, our clients want to talk about embedded finance. So yes, we are behind the curve. We're not ahead of the curve, but I think a number of the catalyzing forces are falling into place, right, which could accelerate us through the journey, right? But at the end of the day, my job forbids me from making predictive statements.
No, so thank you for that, Arjun. So just looking at the other side of the coin, right? So talking about the actual companies which would use a bank to create an embedded fintech. So say I'm an owner for a mid-sized business in the kingdom. I've got a digital presence, maybe an e-commerce business, for example, right? What would you suggest are the first things I should be looking at if I want to start creating an embedded finance solution as part of what I have already?
Yeah, so I think that this question is not just the kingdom. This question is being asked, by players across the board, right? So actually, if you look at all these businesses in the US which sat on the Shopify platform, right, are actually offering embedded finance right now to their end customers, leveraging what Shopify has created with Stripe and other parties, right? So it all depends on where you are. If you are of a fairly I guess decent size, if I may say so, and decent is left to interpretation, right? And you've got a consumer business, I think a good place to actually start is point of sale finance, right? Is to actually say, is there a way for me to make the customer journey easier, blur the line between sort of payments and lending, and that's kind of where we have seen the growth with BNPL coming, right? So it's not only just been the large conglomerates, but it's been smaller. Embedding payments, right? So people are embedding payments. People are embedding cross-border payments. If you are actually a small business and you want to take loans, right, as working capital, you should also look at the other side, right, where you can work with fintechs who are in turn embedded with banks to say, hey, are you willing to lend me against my revenue, right? So there's a lot of revenue-based lending. So I think it's both sides of the equation that you can that you can look at if you're a mid-sized business. It doesn't preclude you.
And one question related to this, which we've been asked a couple of times, is around super apps. So does embedded finance then lead to the perfect super app creation? Is that part of the experience and journey as well?
Oh, definitely, right? So any super app to actually be successful is about embedding the consumer experience into the journey, into their apps, right? And that's what WeChat has achieved, right? So if you're actually really going to see successful, genuinely successful super apps, right? They are going to be, they are going to embrace embedded finance, right? Because what they're doing is creating platforms on which you come and do you experience whether it's booking a taxi to buying I don't know a meal, and so therefore you can have that. You could do actually embedded savings, right? So a number of super apps actually offer that, where you go and you make a payment at the store and the roundup amount goes into a sound savings account, right? You can do goal-based savings. They'll integrate into investment vehicles where every day at the end of the day 5 riyals automatically leave your wallet and go into an investment vehicle. So yes, I think there's no way for super apps, in my humble opinion, to succeed if they don't actually embrace embedded finance.
Great, thank you. I think that's covered most of the questions which we had, and I appreciate we're short on time. So thank you for bearing with us. I think last question I have is, if I'm here, I'm learning about embedded finance for the first time. It's a new concept. It sounds super exciting, super interesting. Where can I go to learn more about this topic? And I am going to give your plug Couchonomics here, because Couchonomics is an excellent resource. So anyone who does want to learn more, not just about embedded finance, but generally what's happening in fintech, go to LinkedIn, type in Couchonomics, and you'll see a ton of resource there. But if there's anything else, Arjun, you'd suggest, than anybody who wants to learn about it.
Yeah, so I think I think, well, thanks a lot for the plug. I wasn't going to say that. So I'll be honest. For people who are on LinkedIn, actually, if you go to the post which I did regarding this very event that I was coming and speaking, I've actually embedded 3 very interesting reports that we at Arthur D. Little have written on embedded finance in the recent past. And I think they're very well written, in the sense that we've written in a manner that we have started from, I guess, the platform, and we're building the story. Over the next 5 months, there is a commitment from my side that we will see another half a dozen viewpoints on embedded finance, where we explore embedded finance from a telco perspective, from an automotive perspective, in terms of how AI is being used in embedded finance. So I think one recommendation here is, go onto the Arthur D. Little site, right? Search for embedded finance, banking as a service, because I see there's 2 sides of the coin, and you will start getting, some very rich content. Otherwise, I'll be very, very honest with you. There is no shortage currently of very good material on embedded finance that is available at the end of a Google search, right? Our peers, other consulting firms, have written some tremendous papers. Some venture capital firms have written some very good papers on embedded finance, and actually some technology companies have written very decent papers. I've recently read a paper from Temenos, which was actually quite interesting. Obviously technology oriented, because that's kind of what they are trying to sell, and it's a part of their sales pitch. But it's actually a fairly good document for you to read. I was actually reading it 2 or 3 days ago. So there is no shortage on embedded finance. There are actually quite a lot of interesting courses now being offered also, right? From educational institutions, whether well-known firms or ones who actually do professional studies, which you can go and pursue a course if this is interesting. But there's nothing better than going and giving it a shot, right? You could actually go out, download your app, and sort of experience payments, savings. There's a lot of sort of interesting apps out there that you could download and play around with, right?